And now we have a new president called Donald Trump, who is coming in on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, crypto. Here's Bitcoin, following the same pattern roughly. 2017 has been my base case for a while. Directionally, we should get this right, and it should continue to rally into the end of the year, into 2025 and maybe into early 26. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here.
In just 24 hours, the Trump inauguration is projected to see crypto prices soar, as institutions and investors eagerly await. Today, we hear the latest prediction from Real Vision CEO Raoul on Bitcoin, crypto, and where the market is headed in the coming weeks. Bitcoin is one that is headed for an unprecedented price milestone, and Raoul foresees a financial tidal wave that will catapult cryptocurrency to new highs. With the keen eye of a seasoned investor, Powell casts a spotlight on Bitcoin and the expansive cryptocurrency market, recognizing its significance against a backdrop of economic uncertainty. Bitcoin is sitting just above 101,800, up over 120% year to date. Amid this fiscal tightrope walk, Powell discusses not only the economic indicators, but the absolutely parabolic surge in crypto prices we're about to see. Raoul Pal says the crypto world is on the brink of something massive, a seismic shift for Bitcoin and crypto in what he calls the banana zone. This isn't just speculation, it's a pattern Powell has seen before. As the momentum is building and the institutions are quietly positioning themselves, Raoul says everything is about to change. He says the next phase of the crypto cycle is critical, and he's stacking big bets in his portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Raoul Pal says that he's remaining bullish on digital assets after significantly increasing his position size during the last bear market. The former Goldman Sachs executive gives a portfolio update on which crypto assets have the biggest upside in the coming months. With major pension funds and institutional investors on board for the coming cycle, Raoul Pal predicts that crypto is on track to be a $10 trillion digital asset class. Let's get right into the interview as he gives his latest Bitcoin prediction and where we're headed in the coming months. Drop your comments down below and subscribe if you enjoy the content we do here.
The big driver of the overall cycle and liquidity and all of it is this business cycle. Liquidity leads it, but Bitcoin is actually highly correlated. Basically, when you cross 50, those are the white lines, which is what we're about to do. Cross 50 on the upside, that's when the real banana zone starts. And then when ISM peaks, that's normally when Bitcoin peaks as well. So we are only at the bottom of the ISM cycle. We're nowhere near the top. So what it tells me is the probability is this cycle is going to go longer or later than certainly the last cycle. Let's start with the elephant in the room, because you guys are nervous Nellies. Everything is so scary. The crypto went down 5%. We're all going to die. I'm going to lose all my money. Didn't you show me this chart of global M2 and Bitcoin? Doesn't it mean that Bitcoin's going to 70,000? Calm down. You all need to grow some cojones, and you need to learn stoicism, inner peace, meditate. Do anything but stop bleating on Twitter about your fears all day. If we did that anywhere else, people will get really bored of us. I get really bored of it. So let me talk you through why you should stop your bleating. In 2017, we had a new president of the United States that shocked everybody getting voted in, called Donald Trump. He came in on a ticket of tariffs and trade war and onshoring and tax cuts. And now we have a new president called Donald Trump, who is coming in on a ticket of tariffs, trade wars, tax cuts, and deregulation. Sounds kind of familiar, right? Well, remember the M2 collapse that we're seeing now, and oh, my Bitcoin is going down to 70,000. Do I sell? Do I buy? What do I do? Help me, help me, help me. What does it mean for my coins? Okay, it all happened back then too. Global M2 sold off. That was because the dollar went up. So we had exactly the same repeating pattern, which kind of says that global M2 should probably base around here. Again, don't expect perfection, but expect some repeat. Oh, the NASDAQ did something similar too. It would suggest the NASDAQ should be going up pretty sharply now. And lo and behold, today, the NASDAQ has a really strong day. Feels about right. Old Trumpy boy's about to come in. But it's about the dollar. The dollar's been strong. That's what's been driving global M2. And guess what? It was identical back then too. Now, this chart's been copied by every on X because they're too lazy to do their own research. Started with us, as all these charts did. The M2 charts, all of them, was myself and Julian Battelle, a global macro investor, and then Real Vision Pro macro, and then we spread it further with the world, and they all get copied. But I guess it's flattering. Crypto, here's Bitcoin, following the same pattern roughly. 2017 has been my base case for a while. Do not expect it to be identical, and do not expect it to be going to wherever the scale says. I'm not looking for $1 million Bitcoin. Sure, there's a probability, but it's like 5%. But directionally, we should get this right, and it should continue to rally into the end of the year, into 2025, and maybe into early 26. We'll have to wait and see. But this is what the pattern tells us. It's repeating the same pattern. Bitcoin should be up only from here. And this is the typical post-correction halving. So what we have is the start of the banana zone, which we talked about from about September, and that was when Bitcoin hit 50,000. So the first banana zone phase one, that was this period here, as we come up from the sell-off from the halving. Then we have the correction from the banana zone phase one. Happens every time. Then what do we get? The banana singularity. That's the next bit, when everything just goes up. And it makes us all look like geniuses. Every stupid coin we've ever bought goes up. Everything goes up. But luckily, crypto market, it trends up over time, so it kind of covers all sins. As long as you're not too far out the coin curve, you'll generally be fine over time, particularly if you don't f this up and stick to the big ones.
Raoul says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Raoul has been stressing to investors for months that all the factors are beginning to align right now. We are heading into the banana zone, a period characterized by parabolic moves upwards in crypto prices.
So that's what I'm expecting next. We should be starting now. Let's talk about the dollar again. Dollar is a wrecking ball. Strong dollar lowers economic growth. The US Economic Surprises Index shows that it follows the dollar. The dollar has a 2-month lead. The dollar's strong. The economy slows down. So we're expecting to see the US economy slowing down over the next coming 2 months, and sharply so. Now, the ISM survey, which is the Institute Supply Manager Survey, is the best guide to the business cycle, comes out monthly, has been below 50. 50 is considered sort of very low growth, with below, let's say, 46 being recession. We flirted with recession many times. We never got there, but we've had a slow growth. Well, the economic growth has been relatively strong, and part of that has been pre-election stimulus effects. The other part has been the technology bifurcation. So technology, which has no debt, doesn't care about interest rates. In fact, all the cash earns more interest rates, just make more and more money. That's been exploding. While the services economy, the manufacturing economy, all of that has actually been very sluggish. So below 50, bad. Now the new orders, which is a little more volatile, is starting to tick up. Suggests, you know what? We might all start earning a bit more money, i.e. our businesses earn a bit more money. Economic growth comes back in more meaningful ways for Main Street, for the average person who hasn't really felt like it's been boom time unless you're working in tech or you've been investing in crypto or the markets, I guess. But generally speaking, small cap stocks, all of that's driven by the earnings cycle, which is driven by the ISM. So financial conditions lead it all. Financial conditions suggests that the ISM is going from 49.3 today to 55. 55 is not yet a full expansion. Look how far the ISM normally gets to. It kind of gets to 60. So that means that on a 9-month basis, the business cycle is going to be growing. Great. The economy is going to be booming, or at least doing a lot better. I think probably booming. And that matters for our crypto bags, because Bitcoin is actually correlated to the ISM. So here's our Bitcoin implied pricing. If we go up to an ISM of 60, we're kind of 300 plus thousand Bitcoin. And if we go higher, we get higher. So because last cycle, remember, Bitcoin peaked in ISM peaked in March 2021 at a huge level of like 63, 64. We are nowhere near. Even we haven't started the cycle yet. So it's all to play for, which is why it's going to be longer and back-end loaded, and it may go into 2026 first quarter. Let's see how it plays out, but that's looking like it to me. And I've been adjusting these probabilities, over time, but I've always had a decent probability that it's back-end loaded. I also think it might be a bigger cycle than expected. ISM, also a driver of the Bitcoin of alt season. So ISM crosses 50, people have more money. Alt season starts increasing as people start reinvesting their money. So alt season is that. Small caps in regular equities, same kind of thing. Macro seasons doesn't really matter, but that's all fine. Macro summer is where we are in the seasons, just by the dip. Part of the don't f up philosophy is by the dip. We are nowhere near the top. You've got nothing to fear except fear itself, or I don't know what you fear. I don't get it. I don't get it. It's just normal stuff, right? Market goes up, market goes down. You will get big drawdowns very quickly because the market over time will go up until the business cycle peaks, the liquidity cycle peaks, the financial conditions peak. We're just on the way up. So there's nothing to worry about. Okay, next chart. NASDAQ, this recent correction has also meant dips are for buying. So NASDAQ, number of stocks, a percentage of stocks trading above their 50-day moving average collapsed to the buy zone. Incredible. Great opportunity. Buy the NASDAQ. GMI cycle, Bitcoin cycle top finder. Nowhere near. Nowhere near. Nowhere near. So just buy dips. Previous cycles, I don't think you probably can see all of these colors. We're the purple one. We think we're following the lighter purple one. And that seems to be playing out pretty well. So all good on that. You can see the little mini corrections after the first phase of the banana zone. Had our mini correction. Next phase, look at these puppies. That's what we're coming to. The next phase of the banana zone, the banana singularity, also known as alt season.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing Ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Pal strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Pal's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below.